the screen. So we're going to talk about carbon markets in Africa, where we stand as of now. And I'm going to invite our moderator for this session, Jodian Woodley, the co-founder and CEO EcoSafi. She's going to be our moderator today, or at this time. So let's give her a round of applause as she makes her way to the stage. And she is joined by Elijah Isabu, who is the manager, Carbon Markets FSD Africa. A round of applause for him as he makes his way to the stage. There's also Martin, who's the co-founder and CEO, Octavia Carbon. A round of applause for him. Dennis Ngigi, our founder, Green Voyage, is also part of the panel. And last but not least, we have Dennis Owino, head of Carbon Finance, Melanin Capital Neobank. Welcome to the stage and take us off.
Hi, everyone. Thanks so much for joining us. I wanted to start with a question for the audience. Can you raise your hand, and I won't ask you to do it, but can you raise your hand if you feel comfortable explaining the carbon markets to somebody that you meet in line at the buffet? Can anyone say, yeah, the carbon markets, I get it. This is what it's about. Like, does anyone feel that they have that level of comfort? Obviously, it's a bit of a trick question, right? Because these markets are complicated with lots of acronyms, and it kind of feels like an insider's game sometimes. And honestly, sometimes that's what's really hard for investors as well, because it feels hard to wrap your head around what good looks like in these markets. So all of us on stage are carbon nerds, and we're in different parts of this ecosystem. So I just want to say, to start out, I think of carbon as a commodity, which it is. It's a commodity that's produced in Kenya and across this continent, and the panel is about where do we stand in the carbon markets in Africa. So if you think about coffee, which is a huge export, right? We have different grades and quality of coffee, and it's really important that we keep that quality high. For instance, for Kenya, you walk into a Starbucks anywhere in the world and you can see Kenya single origin coffee beans. If it wasn't high quality, it wouldn't say the word Kenya on it. We've got to keep that quality, right? So it's really important. And often with coffee, you have the spot market, you have the short-term offtake agreements, and then you have these really big, lucrative, long-term offtake agreements. We also have that in the carbon market as well. So that's something to discuss. But key here is, just like coffee, if you go into an art cafe and you order a cup of coffee and there's only 10% of a cup in there, right? And you say, where is the rest of my coffee? And they're like, oh no, that's what a cup of coffee looks like for us. That's some of the challenges that people have in the carbon markets, right? We want to make sure that people are getting their full cup of carbon. So without further ado, what I'd really like to focus on is the issue around qualities and how do we make Africa a leader in quality carbon. And I just think this group has so much integrity, so it's such a pleasure to share the stage with them. If I can start out, some of us are project developers, some of us are funders, and some of us are enablers in the in-between stage. So the question I'd like to take to all of you is, where do you see us being able to improve or focus on what is going to get us that distinguishing quality for carbon, and actually globally for African quality carbon credits? How can we improve on that? And as an investor, of course, what are you looking for when you're looking for quality? Would you like to start?
Yeah, sure. Okay. Thanks once again. My name is Elijah Isabu, as it's been said. I work for FSD Africa. It's a specialist development finance institution. And we look at carbon in a different way, in a sense that we look at carbon as a second level in terms of capital stack source. And looking at quality, it's a very good question, because I think we are also enabling, and we're engaging project developers, linking them to investors. And investors are very keen on how you're demonstrating issues of in terms of monitoring, right? Clarity in monitoring and verification. Benefit sharing is very important as well. We are seeing people, or the investors, very keen to projects that demonstrate a very strong social impact. Interesting enough, we're having investors who are saying carbon can come secondary, but demonstrate the social impact that you are achieving, right? And also in terms of quality as well, also aligning with local regulations. We are seeing voluntary buyers still asking for letter of authorization, right? So not only compliance, but you're seeing some buyers who are saying, okay, you still have to give us letter of authorization for us to look at you as well, right? Yeah, maybe you can stop at that point. Okay. But again, there are many other aspects in terms of enhancing quality.
I like how you're saying it's part of a capital stack or it's part of the bigger picture, but it can't just be about the carbon.
Exactly.
That makes a lot of sense.
Yeah. And without, we don't want to mention names, but I think we've seen projects fail when they're 100% on carbon.
Funny that, but we won't mention names. Okay. Martin, go ahead.
Thanks so much. Yeah, I mean, you are spot on by making this about quality. And I don't think quality is a choice as such. Quality is a trend. And we're seeing low quality suppliers struggling. We're seeing high quality suppliers thriving. And quality is objective. There is ratings agencies that, just like in many other markets, would essentially rate different types of credits for their quality. Very proud to be a AAA rated developer. And that's essentially what I think investors will increasingly be looking at when they look at investing in projects. Ultimately, it does come down to how do you stack up against the global demand for high quality credits. And I think that's where some projects do really well and others not so much.
Yeah, for those of you who aren't familiar, there is the rating agencies of Moody's and Standard & Poor's for the bond markets globally, but there are increasingly carbon rating agencies that depends, it could be direct air capture, it could be clean cooking, it could be something else, but they look and say, when you claim that you captured or you avoided 1 ton of carbon going into the atmosphere, how likely is it that you actually did it? And then they give you a rating from AAA to D, basically. And that external validation really helps a lot of, especially funders, navigate who's doing the good work. Anyway, yeah, go ahead, Dennis.
Yeah, so we sit, Green Voyage sits at the middle of the project developer and the carbon credit issuance bodies. So really we are enablers, basically the route to market from ideation all the way to issuance of the credits. And at the position we sit, we get to see a lot of issues with the carbon projects that we handle really are about the data integrity. The data that's coming from the carbon projects vis-a-vis what the actual claims are. Because I don't know whether most people know this, an auditor will basically look at how you did your calculations for the credits, not really how credits you generated in your project. So the data integrity is key, and then also the adherence to the methodology set when you're developing the projects. Because if you are able to scrutinize as a technical developer, if you're able to scrutinize the methodology itself and ensure that you have ticked all the boxes, more often than not, your credits will be high integrity.
Yeah, thanks. That's a really good question. So at least the way I would look at quality is just, first of all, to ask the most fundamental question is, all carbon projects are trying to solve a problem. And for whichever technology or whichever way, I always often ask, what is the motivation of the project or the founder of that project or organization? What is the fundamental thing that we're trying to solve? Carbon comes as a tool or an instrument to help. But if the initial idea was, oh yeah, there's the carbon markets and all this, then the integrity is compromised in the beginning and the foundations of that. So apart from having stringent MRVs and having technology to do that, but there has to be, what problem are you solving that is climate-based first, and which technology are you using to mitigate that, and how are you helping? So once that is, of the highest integrity and you're really doing that, then we have the standards and have the methodologies to support you in making sure that you can quantify what your impact is and monetize it. So I think above and beyond just taking the boxes on the technical side and the methodology, it has to be real work that is being done in the field to generate real credits.
I love that, because the question is, does the solution meet the problem? And if it does, then the carbon credits are created, but not creating a solution in order to generate carbon credits. I think that's really been a shift in the last few years in this sector. That's really helpful. And I'm kind of curious, I remembered Lindsay saying Chatham House rules, which is when you might repeat what someone said, but you never ever say who said it, right? So that's the tent. We're in this tent here. What's your bottleneck, your pain point, that wish list you could ask Santa Claus? If they could just do this, it would make so much more sense, or it would unlock the capital, or just help people understand this one thing that I keep having a hard time getting across. I'm curious what your, rub the lamp and ask the genie your question.
Thanks. Lots of things. You only want one?
You get one.
Okay, I will go with price stability and very clear in terms of prediction. That will be very important. At the moment, I think the voluntary carbon markets, the prices are not very good. That's why we are really trying to see whether we can be able to get into the compliance market, which there is a little bit of certainty. The COSIA market is coming in, which again is encouraging as well. But beyond pricing, I will say that I will highly be encouraged if I get local capital providers participate in carbon markets. And in this case, I'm looking at the insurance firms, I'm looking at the banks as well, and the pension funds, because they hold immense resources as far as capital is concerned, but they need just the right understanding on how the markets work, and appreciating the fact that these carbon projects are already existing businesses. You should, like he said, develop a project that you're solving a solution, then carbon comes in. For example, if I look at the case of biochar, if you focus on, it's on an organic manure kind of a project, right? You have an entire ecosystem of farmers, they're ready to off-take that organic manure in replacement of the synthetic fertilizer, then carbon comes in secondary, right? And the banks are used to financing agriculture projects. It's not new to them. But if you go with the aspect of this is a carbon project, we will only pay your loan once we sell your carbon credits. No one will participate, right? So my wish is the financial institutions having a very strong participation. Also for the government to streamline the coordination. We appreciate the fact that regulations have been developed, which are very good. They are enhancing transparency in terms of how benefit sharing is to be done, which sectors are to be considered. But again, there is a lot of coordination, because in the same regulations, they mention several institutions that are supposed to come and work together. Yeah, if you can have an SLA on the response rate from the governments, that will be fantastic as well. Then
this is your third wish. Okay, go ahead.
Oh, this was only one,
You can have
right?
one more. You can have it. Go for it.
Okay. The last one will be more of getting our local developers access the investor base in Global North, right? I think local developers are having it rough, if I can use that, because of the high cost in terms of accessing possible buyers. That's why we try to come in and bridge that gap. But again, yeah, it's still quite difficult for them.
It is, and a ton of carbon offset, as in it didn't go into our atmosphere, made in Europe, and a ton of carbon that didn't go into our atmosphere, made in Africa. There should be no difference. But there's a lot of perception around that, and it changes the pricing. And for us in the Global South, that is really frustrating. You're quite right. I like your point around we need more domestic consumption of carbon credits. We need our pension funds investing into it and things, and not just exporting it to usually the Global North, right? So that's an interesting point as well. Yeah. Have you found that, Martin, as well, on the sort of, because there's a lot of direct air capture in the Global North. And we've got such great conditions for it here in Kenya, for all the reasons. Have you found a sort of price differential between the geographies, or does the technology that you employ kind of just make that uncertainty go away?
It's a great question. And to be clear, like our business model for now is entirely export focused. So again, back to the coffee equivalent from earlier. And the buyers that we have are sort of 2/3 in Europe, about 1/3 in the US. And again, I would want to see, I think, more global, so like local investment into the sector. I do think it is right that global north countries pay their fair share for carbon emissions that essentially they mostly cause and Kenya didn't so much cause. So I do think it is right in some ways that the main buyer pool for carbon credits would be in the global north. But yes, I think it's also true that there should be more awareness around it. And I think even some sort of even minimal pricing of carbon, even in this market, would be helpful. I think just to sort of steer decisions away towards things that are long-term sustainable, because those are often like also very good long-term business decisions. Clean cooking, clean transport, and so on.
I didn't give you a wish, though. I'm sorry. Did you have a wish?
One, and that is a sort of public awareness of durability. And that doesn't mean that durability of carbon removal is the be-all and end-all, but just to be clear what I mean, emissions stay in the atmosphere for thousands of years. And that also means that in a net zero world, at least, all the remaining emissions would have to be sort of like offset by like durable carbon removals that essentially create a net zero impact on the atmosphere. Of course, it's not something that we can sort of go to from today to tomorrow, and I do think there needs to be like a gradual transition in how that net zero comes about, and I think carbon removal technologies, like what we're developing at Octavia, have a big role to play there. And again, that doesn't mean that durability needs to be all that people buy today, it very rarely is, but I think an appreciation of its role and its sort of like growing role and importance over time, I think would be sort of like a good first start for us.
That's a great point, thanks. Dennis, what's your wish?
Okay, my wish, I'll start by explaining first that I don't know whether people know we don't have a local auditor, a VVB.
We don't, no.
They have local representatives, but I don't think even in Africa we do have one. If there is one, it might be new. So I think the first thing that my biggest wish really is on the knowledge creation platform. We are not short of scholars in Africa. We need to have our own local auditors who are able to audit projects in the African context. And I'm not being biased if we have anyone from Vera or Gold Standard here, but I feel that those standards were made for projects outside Africa. Yep. So we need to localize, first of all, the standards by having local auditors. And then we need to also upskill our graduates from the university level to be able to participate in carbon projects. In our own capacity as Green Voyage, we have tried to speak to a couple of local universities to try and introduce professional programs within their curricula where graduates could actually upskill themselves. An environmental science graduate could easily upskill themselves and easily blend into the carbon market.
Thanks.
Yeah, thanks, my fellow Dennis, for that. Yeah, I completely agree with you in terms of the localization of international standards, because I've seen previously how that has excluded certain projects that have tick all the boxes, integrity, and everything is just because they don't comply with international standards. My wish would be for governments, Africa, international, to act as market enablers in the carbon space as opposed to gatekeepers. So Africa is at a unique position right now, especially as we're shifting towards compliance market as a supplier of high integrity carbon credits. It comes with its own risks, but also opportunities, especially for the government to participate in that space in its own unique way. But I would say the opportunities to help the sector to really thrive and scale, and not to deter it. So to really participate in a way that helps the localization of that commodity, which is a carbon, as an international asset, but also to spur the growth and the maturity of the sector, especially in Africa, as we are now positioning Africa as one of the biggest suppliers of ITMOs. So without governments in their participation as enablers, we will miss a critical part of it.
It's huge. And so ITMOs is a type of carbon credit. It's an international transferred mitigation outcome. It's basically when it's made here, but Kenya's government doesn't claim it against their promises. They allow the person who created it to sell it to someone outside of the country. So some are for here for Kenya and some are for sale. And that's what this compliance market thing is. This is what the LOA, that acronym you hear in the news, letter of authorization, this is about the ITMO stuff. So I'm going to follow up by saying my wish is that I've heard really good feedback from government of Kenya on wanting very high quality carbon, like we have very high quality coffee, right? We've got several companies who have gotten to the point that they're going to get their LOA. And from the investor side, what I hear a lot right now is sucking their teeth. Do you really think Kenya will ever issue an LOA? And it is a matter of when, not if. But the sooner they issue at least one, it will, quality, but they need to issue one. That conversation will go away, and the capital will start flowing back into companies in Kenya whose part of their capital stack is carbon. But in the meantime, you know, they need to prove that Kenya is investable in the green economy. And one authorized LOA of high quality is really going to unlock those floodgates and put those doubts to rest. So I'm really we're all nodding, we're really looking forward to getting one LOA out there in the press. And then we can move on with the conversations on investors. It's, you know, is it if or when? No, it's definitely when. See my genie wish. I'd like to open it up to, or I don't know what the format is. Do we have questions from the audience? Anyone want to bring any burning, even just explanations of any of what we've talked about up
I
here?
have a question if nobody else.
Go for it.
Keen to ask you a question, Jody, and of course anyone else here in the panel. I think this is an interesting question. What do we see as the relative importance of the voluntary carbon markets versus the compliance carbon markets for scale of, again, the Kenyan carbon sector, if you like?
What do I think is, or what do we all think is?
What anyone thinks it is, I don't know. Like, what do you think it is?
I mean, the compliance markets essentially are you jump through a lot more hoops, and you have a buyer who wants to ensure it's really high quality carbon. And then that has to be authorized by the host country government, like we were just discussing. And that's the compliance markets. And the voluntary markets in the past have been more like when you go and buy an airline ticket and they say, do you want to add $5 to the cost of your ticket to plant a tree somewhere? You don't quite know if that tree was ever really planted and who's checking, right? But you think you're doing maybe a good thing, but because you can't really prove it, they're only going to charge you $5 for that. If you can really, really prove it, then you can charge more for that. And that tends to come under the things of the compliance market because there's a lot more scrutiny in that. So is there a role for the voluntary market moving forward? It's kind of like saying, is there a role for lower quality carbon? I mean, I kind of tend to conflate those, and maybe I'm wrong in saying that. We've sold all of our past 4 vintages on the voluntary market at a record-breaking $35 a ton, when most cook stove credits go for $5 to $10 a ton, because we can prove it. So there's certainly buyers on the voluntary market who are looking for quality, but then they have to figure out how it's measured, and are there ratings agencies and all, you know. So I mean, there's always the voluntary market. But I think what's happening now is the applications for authorizations from African governments are far more than the credits they're willing to issue. So you're getting people voluntary market credits, kind of like if you're a coffee grower, but you don't know who's going to buy your coffee at the end of the season. They make the credits, so to speak, but they don't even have a buyer yet, and they're looking for letters of authorization. Then you have people who do have buyers, and you know, there's different qualities. I think it can make it quite confusing and slow things down on the government side. So I don't know. I mean, would I do away with a voluntary market? I don't think you can. That's the whole point. It's voluntary. But I think it would help to shape the government strategy more if they were quite clear what's going to be allowed through the voluntary market, what's going to be allowed through the compliance market, because I think that would help developers really decide how much they want to put into their strategy, because proving things costs money. Data costs money, right? And if it's going to pay off because you get a higher price, great, you know, but if you don't know what they're leaning towards on their authorizations, it's hard to know kind of as a business how provable you need to make your carbon credits. So yeah, the voluntary market is an interesting question.
Let me chime in on that. So in my space, I see the voluntary markets being phased out completely. And this is why. Since what happened, we've said we're not going to mention what happened. But all the...
I'm not going to mention it.
I do think it's worth mentioning for the non-insiders in this room that we're sort of subtly referring to Cocoa Networks, who sadly went bankrupt earlier this year. Again, lots of stories related to that. Look it up if you're interested, but that's the thing that we're not mentioning.
Yeah, so thank you. I mean, he did, I didn't.
You said the quiet part out loud.
So, I mean, the buyer conversations we are having since that incident, they are all insisting on LOAs. So, I mean, maybe the voluntary space, they didn't need you to tick a lot of boxes in terms of what you need to do for you to get your credit sold. But right now, for all the buyers that we're talking to, they actually need you to. And in my perspective, because prices are better in the compliance market, I would really advocate that we phase out the voluntary markets and we have more control on the volatility of prices that happens in the voluntary space and sell all the credits in the compliance market.
Can I add? Sorry, I will contradict your approach, unfortunately.
I like this.
Right? Because if you look at some of the technologies, I think earlier on we just threw a question to you in terms of what the kind of price that you're getting for your project, right? That price will not get at compliance market. Yeah, yeah. The biochar prices of 200 USD per ton, you'll not get those ones on compliance market, right? It's voluntary market. We have seen recently the World Bank has just structured $120 million bond for South Africa, with 25 million of it going to the restoration of degraded lands. So it's an outcome-based bond. And the restoration, they are using Speakboom. This is the succulent plant. And Amazon has procured 10 years of those carbon removals. Again, that's a voluntary market as well. So these two markets should be able to coexist to some extent. And also there are also some, let me say, personal individuals or even specific institutions, not big ones, but small ones, who want to invest or want to decarbonize or offset. They can't easily offset in the compliance market. They'll go to the voluntary market. The only thing I will say is that the voluntary market, you have to enhance the integrity of it, either leveraging more on, for example, ICVCM principles. And the beauty is that on the net zero part, the likes of VCMI, they put the claims code where they're guiding as well as those corporates who want to claim that they're really offsetting. How are they doing it, right? So I will say the two markets should work in harmony. They're almost converging, but again, I can't really say you wish away voluntary carbon markets. Yeah.
Yeah, I would say the underlying factor and issue here is quality and integrity. From a buyer's perspective, they want to be assured that if they are buying 100,000 credits or ITMOs, those are real. And the integrity of that credit should not be in question, regardless of the market. So, yeah, previously it was a bit of a wild, wild west, and there's a market correction with the Integrity Council and the CCP. So, but the market, from a buyer's perspective, they will be considered, there will be your sovereign buyers, and then you have your corporate buyers who might choose for their own purpose. For example, if it's tech, and they're like, yeah, we want to buy credits which are aligned to, which are more technology driven. So the underlying thing, what they want is that if they're buying 100,000, the integrity of that 100,000 credits should not be in question. And the market can play itself. And the idea is that, which obviously we want to demonstrate further, for example, EcoSurf has done it really well, is if you develop a high quality carbon project with high credits, then you can tap it into both markets and still fetch premium prices.
I mean, we look at it as a blended model, to be honest. We have our compliance offtakes, which are very bankable because they go on for a 5-year, it can be funded, it can help us with our CapEx, our expansion, that's great. But if we go over the amount, or we go into a country where we don't have a compliance offtake agreement there, the voluntary markets are a way to help finance the entry into that market. So I don't consider it necessarily either or, although I agree that, I think we all agree, that you have to be able to prove it. And that's the quality that is sometimes missing in the voluntary markets. How's the audience feeling? There's a question.
Hello, I'm Serge from Senegal. Used to be an operator in social business in the water company. My question is, what would it take to build a local auditing firm for the carbon market?
So a local standards, VVB kind of.
Not on the local standards, but that will be useful for you to sell the credit internationally, but with having a local company.
A local company, sorry, to create the credit or to verify the credit?
To verify.
Okay, what would it take for a verification bureau?
Yes.
Okay, so there are these global standards. Some of them are called gold standards, some of them are called Vera, and it's like an accountancy firm, an audit firm, right? And you have to hire one of them that is accredited by one of these standards you've signed up to come every year and say, yes, they're still producing carbon in a way that has integrity. But none of them are based in Africa, to your point. Ours come from India and Switzerland, and they fly over here, and they don't really know this market, but none of them are here, which is a great point. Why not? Even if the standards are set abroad, the verification bureau could be based here that are, approved by them. So what would it take to have that kind of verification bureau? I think you would have to have a great relationships with the standard bodies, that they really understand the need to have verification bureaus on this continent and why that would make a difference than flying someone in from a different part of the world to check your carbon program that's run here in Africa, which they don't have a background in, right? What do the rest of you think?
I think there are international accreditation bodies that would actually play the role of certifying someone locally. No one has been bold enough to start because of the many systemic challenges that you would face for you to establish your own accreditation body here, and also to the credibility that it would take for you to get there. So I feel like all the stakeholders involved, from KENAS, the Kenya National Accreditation Services, that's in the Kenyan context, to the government itself, the Special Envoy of Climate Change, everyone should get involved and kind of try and set this up.
Just to add, I believe VCMI last year was trying to run the training to develop the skills for local VVBs, right? So of course there's a capacity gap, then there's that procedural challenges, right? Yeah, but I think the biggest is capacity gap in terms of understanding how to do the validation verification from a local entity. Yeah.
Do we have any additional questions from the audience? Oh, lady in green.
Hi, my name is Winnie from Britain.
Winnie from
Britain.
Britain, great.
Yeah, I have a risk question. With African carbon credits often selling at a lower price than global ones, how can robust risk management and insurance help boost the perceived integrity and value of these credits for international buyers?
So what's the role of insurance in boosting the price of the credits abroad?
To protect the risk.
To protect the risk for the buyers?
Yeah, from the buyers.
Interesting. Gosh, it sounds like a question you should be answering for us.
Yeah.
What's your experience on the insurance side of things?
Happy to have a crack at that. Great question, and I think there's a huge role for insurance in the market already. I think several compliance schemes like Corsia, I believe, the one that's used by airlines, actually do require a certain amount of either insurance or like a buffer pool, basically like meaning an extra amount of credits, basically just to insure against the risk of like reversals, which is essentially a term in which case, like say some credits don't sort of like meet the quality standards down the line or something like that. And there's already like a number of insurance companies coming onto the market. There's some called Carbon Pool, Kita, and then others. LOAs is somewhat involved in this, for example. And I do think that that value add is huge because, of course, if you are an international buyer, then again, the problem that you will have is that every project will tell you we are different, right? And of course, there is ways of sort of sorting the wheat from the chaff, and the ratings agencies have a big role to play in that. But at the end of the day, the best way of actually essentially just creating that confidence in a buyer is to say, well, if it turns out not to be what it said it was, you will get your money back, or you will get another credit of the kind of quality that you bought, basically. And that is really the role of insurance. And so I think it's already like an emerging sort of like sector within the carbon markets, plenty of white space. So I think absolutely like welcome initiatives by Britam and others to actually explore this more.
Can I just add to that? Yep. So thanks for that, because at the moment what we've done at FSD, we've focusing on Zambia, we've done we've done an assessment on the role of insurance on nature-based carbon projects, and we've mapped out all the kind of risks that a nature-based project will come with. And you've seen the unfortunate thing is that the current active insurances are based out of Europe, and you want to see how can we bring these two parties together, the African-based one to link up with the European ones as part of the underwriting, to be able to touch on those specific risks, which can be able to improve the investor confidence on projects. Because once you have a risk taker, then the investors will be able to easily come in and invest. And also, the insurance is not only a risk part, also insurance have capital, and they can as well deploy on it. Yeah, thanks.
Great question, thank you. Gentleman in the...
So this is going to be the last question, and then we're going to head over the pitches.
Thanks. Josh Whale from Ampersand. So we're based in Kigali, but also here in Kenya. The government in Kigali has already banned petrol motorcycles from registration in Kigali, and just last week completely banned imports of petrol motorcycles into the country. And so a question for us came up around the additionality point. So if there isn't an option to get a petrol motorcycle, then what happens to additionality? And can countries like Rwanda benefit from it and use that funding to help to spin up the sector and fund research or provide financing directly? So it seems like someone should benefit from it in the carbon markets.
It's a good question, and for those of you who are less familiar, many carbon buyers, especially in the compliance market, say, would you survive if we didn't buy your carbon? Because if you would, it's not additional and we're not going to buy your carbon. So therefore, if you don't have a choice because your petrol bikes have been taken out of the market, your competitor's gone, so why do you need green financing? Why do you need to sell carbon? How is that additional to your business? Really, I didn't know that. That's super cool. Plus, I've got one of your bikes. So.
If I can add to it quickly, like I think it is a generally hard question, especially again in this type of venue, like for VCs to sort of fund carbon-based businesses, basically, or businesses that rely on carbon revenue to some extent, because I think everyone wants to think of like carbon as the cherry on top, basically, right? Everyone will tell you, oh, my business is great, but guess what? Like with carbon, it's amazing. But that's not really how carbon markets work. If something is profitable without the credit, then it shouldn't be allowed to issue credit, or at the very least, like it will likely be a bad credit. And there's some sort of caveats to that, like many sort of credits will allow you to cover your cost of capital. But it's going to be difficult to, again, which is of course the mantra of VC, to generate like vastly outsized profits off the back of carbon revenues. At least that's the case in most types of businesses. Removals, I would argue, are somewhat different there because carbon is the only revenue stream. But yeah, it's a big challenge, and I guess like as long as there is petrol motorbikes to displace in Rwanda, I think you might still have a decent shot, and I think you should definitely try. But yeah, I do think that like that is the inherent difficulty of many things. Like it's unlikely you'll be buying a yacht off the carbon revenue, at least if you're sort of in the reduction and avoidance space, if that makes sense.
Anything else? All right, thank you so much, Jordan and your panel. Let's give them a round of applause. That was such an insightful panel. Maybe you can just stand before the